Hello, Warriors. Hugo, how are you? Kevin, Brock, Sensei, Didier, how are you? Hope everyone had a nice long weekend. It was 118 here on the coast. So I was isolating from the heat. Okay, so dollar following through from last week's 3 drive that we had down here. There was a daily, right? So we haven't had a down day since we tagged it last week and started heading up. We didn't quite get a reversal week. Last week we can. This week all we have to do is close above 93.20. I actually think there's a chance for a pullback to 92.40 or so. That's going to be the biggest area if we keep pushing, is going to be this 94 area. I think there might be one little pullback first before we go again. There was, yeah, I know. I'm on the Dixie. Euro, similar thing. On the Euro, we have this little pullback. We had a little stop hunt. One thing I do want to point out that changed yesterday, you know, I was a bear in Euro pound. And this 89.40 was my bull bear line. And last night we opened around here. And once we got through 89.40, 89.50, there was no look back. So now I'm on Euro pound. Okay, so this is important, not just because.
Hey Dale, I think you're either your screen is paused or you're just.
Oh, that was it.
There you
Blake,
go.
thank you so much. All right. It's really Monday for me. Okay, anyway. All right. So now I know why you guys weren't seeing. So here's the dollar again. And the 3 drive on the daily, right? And we're getting follow through this week. 94 is going to be real big. I actually think the way Euro's acting compared to cable, that there could be some type of pullback. I know Canada's strong, but this area right up here towards 132 is pretty significant. And this is what I was talking about in the Euro pound. This 89.40 was big, and you know, I kept trading the 89.40 level. Here I traded it, and here I traded it, and once we got through it, it's a big week. So this changes my view in Euro pound, which favors the long side of cable. And you know, I think I have to go back to the monthly. So I think that Stella's going to have a chance to sell it up at those levels he was talking about. And here's your monthly. Let's see here. Yeah. Okay. So if you go all the way back to 08, 09, you know, we had confirmed highs, but I think we're on our way again to the upside in Euro pound. I wouldn't fade it anymore. Okay, so Charles saying it's Brexit related. Either way, this looks pretty good. It's putting in a good week. I wouldn't chase it up here, but pullbacks to 89.80 to 40, I'd be a buyer if that sets up in the next week or so, and it could. Okay, so that's my look on the dollar. This is very important in gold. I know Blake has it as a channel line, but I've just drawn a horizontal line here in gold. Look at this. Right there on this horizontal line, which makes it look like a descending triangle. And, you know, in here, you don't know what it's going to do. But I would say the fact that we keep testing it here and here and here, and you could say here and here, is that it's being tested too many times. It's like saying, okay, Mr. Trader, you didn't buy the pullback to support here, and you missed this, and you missed this, and wow, then you missed this. But I'm going to give you another chance down here about, I don't know, 3 weeks later to get long. You know, the market usually doesn't make things that convenient. So if I'm right and we get a dollar pullback, there may be one more rally in gold, but a breakdown under here targets towards 1700. This was the $200 formation from the highs, maybe even more, 230. So, you know, that could take you back down to 1700 on a move. If we had gotten back through here, then I would say new highs are coming, 1970. But we seem to be knocking on the door here for a breakdown in gold. So that I think is a pretty important one for metalheads to pay attention to. And then we had on Labor Day a bit of a recovery in S&Ps, but I don't see it for a buy. One thing I do want to say is I didn't have any divergences at the highs up here anywhere on any time frame. So here's your 2, here's your 4 before the break last week. Here's your daily, which really confirmed up at 80. So this would be, you know, one of the exceptions if this was, yeah, not one divergence on any time frame, maybe the 15-minute. It doesn't go back far enough, or the 1 hour. Even the 1 hour, look at these readings, are 80. So if I was to bet, I'd say that we're, you know, going to play some type of correction, maybe down to 33.5, and that we're going to head up one more time for a new high. And I think that'll coincide with the dollar decline, right? So we're in a dollar correction. We're in a S&P correction, and, and this is really broken. You only had one rally if you didn't sell the breakdown here. You only had one rally to do it. And look, you know, we're already $5.50 away from where we were last week. I don't know how to get on board. I just think I have to wait for a reset and maybe a rally back to 40 on this. And with the S&Ps heading lower, yields are coming off a little bit here. Maybe they're going to come off a lot, but here's your 10-year. Okay. If we get something like this from here, 60, that's 18. 18 from here is going to be back down towards 50 again. So you would think if yields are going to soften up again, I know it's a comatose dead instrument, but perhaps the yen, which failed up here at 78.6, could roll over again under 106 would be the reason, but it certainly is comatose. Any questions on anything I've talked about here? I think there's going to be a rally, and I guess the question is going to be if I'm right about getting a pop here from, I don't know, 1750-ish or so. A lot of people are looking for new highs because this was unfulfilled in the euro. I have so many fibs here, but there's a fib at 121 something. It's like a 78.6. I don't want to erase all these fibs because I might be interested. The way I was looking at it this week was if we had a rally back towards 119 to 119.20, I'd sell it. But I'm not going to buy it here, and I'm not going to sell it here. I knew what to do last week on Tuesday, and today I don't have a lot of ideas for new entries, and I'm not going to pretend I do. I'd rather say I don't know, and I have a lot of I don't knows, but I did want to point out this was a big turn in Euro Pound because it changes what you want to buy on dips and what you want to sell on rallies. And plus, if we get any kind of pullback in Euro Pound, you have to buy it. So Blake, how you doing today, buddy? You have some clarity for the
Clarity?
for the Warriors in the room today?
You know, I think that at this point in time, we're challenging some pretty big
Resistance?
resistance supports, depending on what
Yeah.
you're looking at.
Yeah.
So it's not really easy at this moment, based on where we're at.
Yeah.
I think you got to be really careful because, obviously it's a long weekend and, stocks are down today. But I think there's a lot of asset classes that are pushing some key levels of support and resistance. You talked about gold. I think gold's very important here. And, whether you draw it the way that I've drawn it or you draw it the way that you've drawn it, it doesn't matter. It's just, we're sitting on pretty key support, and a break below 1900 is significant, so I think that, you got to be really careful.
Yeah. It's wait for the breakdown or wait for the breakout. I don't, I don't see anything in between. It's a coin toss in between.
I'm not really 100% sure what the catalyst will be, but that's the importance of today. What we're going to do right now is we're going to go through all of the, all the major currencies, all the major, some of the major indices here, and we're going to talk about where we're at. And I think it's going to be very important. Now, before I do that, I do have to talk about, because I put the link in the chat box, but guys, if you haven't signed up for the new Trader Summit, you've got to do it. And I'm going to put the link right here.
I just put it on the chat room, the chat box right now.
You did? Okay, thanks.
Yes.
So, this Trader Summit, our intention for these is to be bigger and better every event. And the last event was pretty awesome. This event, we not only do we have a great lineup of speakers, like, look, you don't have to listen to me this time. You got all these great speakers that are coming on, but more importantly is we're doing also a panel discussion. And that panel discussion is going to be with these four awesome participants, but we have a professional host that's coming in, and we're trying to just nail that down specifically. And we're going to have a host that's going to debate this panel. You can see him right here. And, I think it's going to be an awesome event. It's 3 days and it's free, guys. It's free. And so make sure you get registered. And it is limited seating. There are only so many seats. And then if you don't, if you can't get in live, you can't listen to it, you'll end up getting a recording, a little bit later. But don't worry,
we have two kinds of hosts, bro. A professional and an amateur.
Right. Well,
I knew Steve was like it. Yeah. All right. I fake it till I make it, man.
The thing about this event is it is going to be it's going to be a pretty awesome event. So you guys got to get registered, and you're one of the first ones to know about it, because it's going to start circulating here in the next couple of weeks, and then after that, there'll be all the spots will be taken. So make sure you get signed up. And I just want to make sure that I talked about it and you guys did get signed up ASAP. And make sure you put in your correct email address, because that's
Yeah, otherwise they're not getting any link to join.
You're not going to
That's
get
why.
the, yeah, you're
Yeah.
not gonna get your invite. So that's important.
This time we have everything, Blake. We have a debate, we have interviews, we have presentations, everything, and 15 people, right? So even more expanded than the previous time.
Yeah, I know half of the guys are just going to go just to see Daniel D. Martino booth. I mean, that's
Okay. Wait. Now, since you mentioned it, we need to throw in, a little detail here. Blake is going to interview Daniele Di Martino Booth.
maybe, I guess.
Yep.
All right. Well, it looks like I am. All right.
You are.
Oh, fantastic. All right. Well, that's what I get to do. So,
yeah, Dale is going to be the host, Forex Gal. Just
no,
Blake, Blake
Chad
will stay
asked-
away.
Chad asked if do we need to register for the summit or will we automatically get a link? No, you even if as a ForexAnalytix subscriber, you have to register. It's a completely different thing. So you have to make sure you guys register for that. All right. Now that I've talked a little bit about the Trader Summit, I gotta get moving, Steve, Dale.
Yeah, mate.
I gotta
Go
get
ahead, bro.
on the bias chart. So let's get to it. So the euro dollar, I'm gonna warn you guys. Every time we head down here below 118 in the last couple weeks, we found buyers. So just if you go back to the end of August, look at the daily chart. Every time we've dipped down here, we find buyers. And even last week, as we dipped down in this 1780 level, we found buyers below here. So I'm going to just say be very, very careful. I don't think today is the day that the dollar breaks out. I may be wrong, but if you look at the dollar index, we're pushing right up against resistance. Now, obviously, if you have ForexAnalytix, you already got this analysis that we're pushing up against, this trend line here. And that's a warning. That's a warning that, we are finding resistance. And actually, since we're looking at the dollar index, you might as well just go ahead and mark up at this moment, 93.50. I know 94 is going to be big resistance, but 93.50 is big for now. Okay, so we got 93. Oops. 93.50, 94, big resistance. Given that we've popped out of this down, this descending channel, I'm going to flip us right now to neutral. I think there is a risk that we start breaking out in the dollar and we start squeezing. Remember, the market's really short. So is it today? I don't know if it's today, but I think it feels like it's coming. So dips now should be actually pretty well supported to 93. So now that we've broken out of this, channel, what is that? Okay. I expect dips to be fairly well supported. 93, maybe as low as 92.60. So I'm going to write down both. Okay. Let's go back to the euro. Now the euro is, in my opinion, is still bullish while we're above, 117. We drop below 117, things are going to change a little bit. So right now, support 117. Well, actually, two levels, 117, and then we also have this 117.55. So 117. Okay. Resistance near term will be 118.60. Yep, 118.63. So I'm going to write down 118.60 on rallies. Should do it. We're going to stay bullish right now. Now, let's talk about the cable. Yeah, the cable's down on Brexit news, but technically, you guys remember we had this ascending wedge. We had this false breakout last week. Dale, we talked about it was the throw over. So we had the throw over, and Dale said, hey, I like it when the throw over lasts is just one day. Yeah, one day. False breakout, reversal, and here we are breaking lower. 38% retracement comes in at 130, basically. Okay. So let's write that down. 1. That's key. We are now back in a range. Any rally now back to 132. It's going to find sellers. I mean, today's high is 131.69. I wouldn't get too excited even if we broke new highs. So now any rally back to 132 should find resistance. Let's go over to the Aussie. Aussie's trading pretty heavy. You guys know that we had this this is a throw over on top of this channel. I think we have a bigger channel right here. And that resistance is at 74.15, and then support obviously is going to be down here at 71. So first level support is going to be right here. And that comes in at 70, let's just call it 72 cents. That should offer us some support for today. Now, resistance, look at the highs, 73.10. And just hope we get back up there. You know, for those of you that want to be on the short side of the Aussie, I think any rally back up towards 73.10 is going to be an opportunity. Kiwi. Once again, very annoying, this currency pair. Let's do this. It's probably the very same as the Aussie right now. We're just following these little ascending channels higher, right? So that means support's going to be pretty strong on dips down to 65. 65.60. Okay. Resistance. Today's high is going to offer resistance. So any rally back above 67 cents, or any rally back to 67 cents just in general. Okay. I'm going to keep these on range because I think that they are now starting to show some risk of reversing. Let's talk about the loonie. So the dollar Canadian, you know, we've rallied quite substantially overnight. We are challenging major resistance. Okay. We are challenging this is major trend line resistance. The Bank of Canada is tomorrow. There is risk of a dovish, you know, Bank of Canada tomorrow. And I think the market's kind of, you know, squaring up ahead of the BOC tomorrow. I would expect now any dips back down to 131 to find support. You know, we can actually just probably write this down. Any dip now down to 130.80 will find support. And resistance currently, whoops. I mean, I'm gonna write down 132, but I think resistance. You notice how we just hit new highs, got a little overbought. We're probably going to come off here, but I'm assuming 132 is going to offer great resistance. Should we get up there today? Okay, we're going to keep this in a bearish trend for now, just because we're knocking our head up against this resistance. Actually, you know what? I take that back. I'm going to put this in range because it really has been divergent as of late. Okay. All right. Let's go over to the dollar Swiss. So the dollar Swiss, 92 cents. Also note that the 92 cent level has been horizontal resistance on several different occasions. Right here, right here, right here. Okay. So that 92 cents is going to be really key. And I know that we've discussed 92 cents and also 92.50 beyond that. And we stay bearish while we're below those levels. But, because this is a multi-year trend line break for those of you that don't know. Okay. But yeah, we get above 92.50. We're really probably going to squeeze then. All right. Hold on real quick. All right. Let's go talk about the dollar yen. Same crap, different day. Dollar yen. We're still in this box. But notice how last week we really struggled on the rally to 106.60, which, again, here's this trend line. So I'm going to actually write 106.50 now. I know we can get up to 106.55. Oh, crap. What did I do here? Sorry, I forgot the Swissy. I forgot to write down support. Hold on. My bad. Swissy. Support. I mean, support's right here at 91.60, but I don't want to write that only down. 91.20. Okay. All right. Now dollar yen, 106.50. We are still in a range. Let's go back to dollar yen. And support being, 105.10. You guys know that. So all right. Dollar Mexican peso. So the dollar Mex is right up against resistance right now. Here it is. Remember, this is breakdown point. So that is going to be right now 21.90. Whoops. We're bearish while we're below that. Support 21.50. US dollar, Norwegian krona. Now notice where the US dollar, Norwegian krona bounced to. We have been writing down resistance of 907 almost every day. That is actually 906. I think we had 907 because this is the underside of this trend line, but we're going to just write down 906 as being resistance now. Support. And we can write down 9, but I actually think support's going to be better today if we get a drop back down towards 890. That'll be the bottom end of a lot of these lows here. So $890. We're bearish, but we can possibly flip here. 9.06 is resistance. Okay. All right. Gold. So Dale had it drawn out like a wedge, which I don't disagree. I mean, if you look at, you can just basically do this, say it's building a wedge. But what's really important about where we're currently at is we're actually below the trend line that I've been monitoring for, since the spike lows in March. all right, we're actually below it. So that's bearish just in itself. That means any rally back up towards 1940 is going to find resistance. Key support is at 1900. Okay. And I'm going to tell you right now, I'm off the bullish train. You know, this has been bullish for a long time. It's now going to range. That's big. Why? Because we're below this trend line. We're holding well below it. In my opinion, we have to get all the way back above 1950 again for me to think it's like a false breakdown or something. Okay. Let's go look at the S&P. So, you know, we had this AB equals CD, yada, yada, yada. Notice how we are back below 3,400. That's crap. I didn't want to do that. That's below this green line here. You can see that green line. Okay. That's 3,400. That was the breakout point. That's why it's so important. So what makes where we're currently at really important is that breakout. But what makes last week's lows super important is because this was the overshoot here. These are also horizontal lows. So let me get rid of that blue line for now because we don't need it. Okay. That makes this support at 3,350 super important. Because that was the overshoot. So if we break through that, then things turn, you know, we go from bullish basically to bearish below 3,350. Right now, I want to still keep us bullish. I know it's difficult as, you know, the market's down here, but I think this is the real key support is the 3,350. Okay. God, it's like, do you put it on range? It's I don't know. It's a tough call. You know, it's a tough call right now. But I'll put this as resistance right now is 3,450 today. And I think, you know, a break back above 3,450 will put us back into bullish, and below 3,350 is going to put us near term bearish. So just be really careful with the market here. We are, you know, these are pretty key levels that we're dealing with right now. Okay. All right, guys. So I'm done with your analysis. Your analysis from here, all the majors and you know, those two indices, it's done. So make sure you take a screenshot of it. Steve, Stelios, Dale, good morning, gentlemen.
Good morning.
Good morning.
All right. So big event coming up in 2 weeks.
Indeed. Lots of great speakers, and Blake not speaking this time around, which is definitely better. But
Thank God. Yeah.
Really exciting. I mean, really, really exciting.
I mean, yeah, we have a great lineup. I mean, it's an amazing lineup. So make sure you guys get registered. You know, these events are free. You know, but that also, you know, reminds me that you guys have to visit our sponsors for at least visit them and see what they do if you're not familiar with their names. So you know, get familiar with these names because they're the ones that made this possible. All right. And yeah, make sure you get registered ASAP. Like, don't wait around. All right. So guys, how do you feel about the markets here? I mean, we're under a little bit of pressure, probably going to bounce going into the open. You know, I'm sure you can see that we've got a lot of pretty key levels of support and resistance being tested almost across the board. I mean, you look at the euro, which is really important support down here. You got the S&P that's, you know, obviously we're at, you know, the big breakout points around 3,400. You know, it's not an easy decision what to do from here. What do you guys think overall?
You know, in my opinion, I said this last week on this webinar as well, the markets are slowly realizing that we're getting, as we get close to year end, there's a lot of things that can really derail equities and the situation in general. So you have, you know, the US elections coming up. A Biden win would definitely not be market friendly, or at least that's the theory. You have relations with China, definitely not improving. You have Brexit by year end, and obviously this has to be settled well before in order for it to be ratified, etc. And you also have more COVID cases, more spikes. Europe is becoming a little bit bad again. So all these things just brewing and have been brewing for weeks and weeks. And suddenly I think the markets are realizing, hold on a second, it might not be as rosy as we think. And you look at the tech sector, it's what's been driving markets higher for weeks and weeks. And now it's what's slowly, or not slowly, actually quickly driving it lower. So that's what I think.
How about
Well,
still when Main Street will finally affect Wall Street? Because things are not getting better on Main Street.
Absolutely.
Business closures.
Divergence between.
Go ahead.
The continued, you know, divergence between, you know, the haves and the have-nots. I mean, it's just this latest round of, you know,
a K recovery, they call it, right?
Yeah, I mean, you know, it's just,
you know,
yeah, exactly. The K
we
recovery.
have historical experience and historical data, so there is no surprise whatsoever. That's what always happens the more you veer away from capitalism. Because let's be honest, none of these policies have anything to do with capitalism. It's the exact opposite thing. It's as they call them, socialism for the rich. So yeah, I mean, the more the Federal Reserve and the rest of the central banks intervene to, in essence, keep solvent specific sectors of the economy that aren't solvent since years ago, actually, you know, the more we're going to have this divergence increasing.
Yep, and so it's gonna be fascinating from here. You know, Stelios, you said something regarding a Biden win will be negative risk. I actually think it's the other way around. I actually think a Trump win is going to be negative risk. I think Trump's going to go really after our trade partners, and I think that, you know, I think the market's going to be wrong-footed as a result. If we get a Trump second term, I think
if we get a result, if we get a result,
yeah, right, that too. I mean, I think that's.
I mean, really, it's going to be very muddied waters. This thing.
I think so too. But if Trump does have a second term, I think that actually it's going to be negative for risk. I think he's going to go, you know, really after China and Europe. And it's going to get, I think the markets are not going to like it. Because I think go ahead.
Go on. No, go on.
No, I was just going to say that I believe that everybody, you know, thinks otherwise. And I think this is how the market could get really wrong-footed.
I kind of agree with you, but I think the main question is, do we think the US-China and US-Europe relations move markets more than the Fed printing everything it can and more? That's a question. Because Trump is going to push the Fed to just keep going and going and going, and Biden isn't. So depends on which factor you think has more weight.
Yeah, or, you know, hey, maybe really the bottom line is it doesn't matter who wins. You know, the post-election, it's probably going to be negative risk. So anyway, I don't know, just some initial thoughts, but I'm going to let you guys take over. And
to be honest, Blake, what you say is interesting. In what sense? If you remember, during the previous elections, everybody thought that a Trump win, I mean, the consensus was that a Trump win would be negative for the markets. And after the initial first hours of the limit down reaction, we got the exact opposite. Now the consensus is that the Trump victory is going to be positive for the markets. So it will be interesting to see, if this happens, of course, if Trump wins, to see the exact opposite reaction, to see something like a limit up, and by the end of the day, markets reversing lower.
Yeah, yeah. So we'll see, All right, guys. Hey, good luck today. I hope everybody had a great long weekend. Make sure you register for the Traders Summit event. Don't miss that. And, and as you guys know, for those of you that are like, when the hell is ForexAnalytix going to have their, seasonal offer? Don't worry, we're working on that next. For those of you that have been waiting to be part of the ForexAnalytix community, you wait for like another couple of days, and then we're going to have a nice special offer for you guys. Okay. All right. So guys, I'm going to pass it over to you.
Thank you, Blake.
Thank you, Blake.
All right. Thanks, guys.
Thanks.
Bye-bye, mate.
Good luck, Blake.
So, guys, again, we're seeing more risk off. I remember last week on Thursday, after that big move, was it 4% down in the S&P? We said it will all depend on the reaction from here. Is it going to be buy the dip? Are we going to grind higher, even at a slow pace? Well, it looks like we're not. And
if you remember, Stelio, we warned that these markets, when they pull back, they do it in a violent manner.
Yep. Last time in March, obviously there was a big catalyst there, but it did that. And, I've been saying this for a while. I think we will get a proper leg lower. How long and how low, I don't know. But when everybody is convinced that markets will only ever go up, that's when they're going to go down. And it's only logical. And we've seen this time and time again happening all the time. So I am personally waiting for lower prices in equities, and I'm going to start buying lower. And, as I said before, if I've missed this move, I've missed it. It's okay. So that's what's happening. We're seeing metals also be getting sold. Makes perfect sense. Remember, I'm very bullish metals still, but I think, and I've been saying this for a few days now, I think we'll see 1800, maybe even a little bit lower in gold, maybe 17 to 800, 1800, and silver 21 to 22. That's going to be my level to buy.
Having said that, Stelio, the reaction lower to the metals is rather tepid in comparison to other sell-offs that we had.
I agree.
Oppositely from what is happening to cryptocurrencies, because cryptocurrencies have really, in a very correlated way, reversed lower and in essence are following stocks, but as always, with a high beta.
Stocks on steroids, yes.
Yeah, stocks on steroids.
Yeah.
But I mean, gold and even silver, because silver is considered, the one that's like more of a proxy to risk. They've actually been doing quite okay, I have to say. And, I think that's another bullish signal. I would have expected that, especially given the prior move higher, which was like huge, that would be an opportunity for people to take profits in positions in metals and, see a sell-off there as well. But as it seems, that's not the case. And, I think that should act as a warning to people that are really bearish the metals.
Yeah. No, I agree. I think the dip is going to be, we're not going to see anything near what we saw in March. And I hope we get to 21, 22 in silver and 17, 1800 in gold. Well, let's see. But I agree with you. They are quite resilient given the move. Our friend is asking, why does the paper metals market lead the physical metals market? In normal times, it does. In times of crisis and big moves like in March, if you remember, silver dropped to $13.50. If you tried to buy any physical, it was 18.
Yeah,
so
you couldn't buy physical silver at the prices that the paper market was trading.
Yeah, the spread increases, and that's what it is. You want to buy a financial instrument, go ahead. If you want to buy physical, that's going to be a lot different. So, so that's what's happening. I still think we're going to go lower in risk. Obviously, it's not going to go in a straight line, but I think the path of least resistance now is lower. And I'm happy I squared off a lot, almost all of my silver. I still have a quarter left because I always want to be long some. And I still have just under a third of my Euro Norway short, and I'm going to load up more higher. The thing to note also is sterling. We talked about it briefly. There's been talks from both sides, especially from the UK side. It's a bit of a, how should I say it? It's like an ultimatum, agree or we're not gonna, agree to what we're offering, or we step down. And clearly, like a few of our friends are saying here on the chat, a Brexit is going to be worse. Is going to be worse as an effect to the UK than Europe. That's for sure. But think about what the market's priced in so far. How much has sterling tumbled because of this expectation? I still think, obviously, if we get a hard Brexit, the sterling is going to have trouble, at least short term. But I think on the euro side, it's the euro has been like, oh, it doesn't matter, we're losing one country, it's no big deal. Well, it's not. It is a big deal, and I still want to see 92 or 93 if we can in euro sterling to sell, because I think in the last minute there is going to be something, good or bad, I don't know, but there's going to be something, and I still think in the long run, euro pound should go lower, but I'd just like to sell it higher from here. And that's pretty much it. Otherwise, we have the usual US-China, just war of words again. And as we get closer to the elections, this is going to be used as a weapon and as a tactic for promising or not promising stuff to the voters. And, we have to expect that. So we have the ECB on Thursday. We have to remember that.
Richard, I'm starting to get really worried about you if you read Varoufakis's books, mate.
No. Yeah.
I'm seriously starting to get worried about you. Okay, good for you.
Yeah, pro tip, don't read it.
Pro tip, don't read it, yes.
Anyway, yeah, so we have the ECB on Thursday. That should be interesting as well. Remember the ECB, they get a little bit nervous when euro dollar goes to 120 and above. It did touch that last week, and it's definitely going to be on the radar. So maybe we should wait to see if they mention currency and if they do something.
Usually they refrain from mentioning currency from the perspective of possible intervention. Even Draghi, when euro was at 140, I mean, he never attacked directly the exchange rate, Stelio.
Yeah, true.
So that's something to consider.
Yeah.
But
Anyway,
of course the market, might, take any type of hint, as a call to action or as a warning that they will actually take action. Personally, if you want my opinion, seeing what happens, I think it's impossible for the ECB to even remotely approach what the Fed has recently unleashed and what the Fed is about to unleash. I don't know if you saw that the Chinese actually already announced that they want to reduce their treasury holdings from 1 trillion to 800 billion. Yeah. And somebody would say, who cares? I mean, what's 200 billion, right? In the context of the Fed's balance sheet, is like a drop in the ocean.
Yeah, the whole treasury market is like 50 trillion or something like that. What is it?
But it's not about the extent. It's about the message. And, for those that are looking closely, the message is that nobody is willing to increase their holdings in treasuries while the spending and deficit in the US is exploding in a spectacular manner, which means that it's a matter of time, as we've said multiple times in the past, for the Fed to be the only buyer in this market.
Yeah, it's suddenly the market realizes that they have to see which country is fiscally prudent and which is not before they actually start go buying their bonds and do all sorts of stuff. But
what are bonds? Bonds are a promise to pay the local currency. In the case of US bonds, a promise to pay in the future in dollars. But in all honesty, the yield is ridiculous. It's below the actual inflation, and most of the times it's below the reported inflation also. Real yields are negative, even if you take into account the official inflation. So who really wants to buy treasuries and hold them off for 10 years, 20 years, 30 years? Why would you want to do that?
Yep. Yep. Only if it's how do you say it when you have to? You know, it's a like pension funds have to own a certain
Yeah,
percentage of.
but
Yeah, I agree.
yeah,
I agree.
that's true on one hand. But on the other hand, if real yields are negative, then why not hold gold? The only counter argument against gold has always been, yeah, but gold is not an investment because it doesn't yield anything, right? But
Yeah.
yielding nothing in comparison to yielding negative is positive.
Kirk, our friend Kirk is writing, I want guaranteed losses. It's the only guarantees I can get. Yeah, exactly.
Yeah, exactly.
Anyway, yeah. Okay,
Okay,
that's it for me,
so
my friend.
jumping to the charts. Now, up with the escalator, down with the elevator. We warned about that. Actually, after 2 days at the lows of the second day of this sell-off, the Nasdaq had, first of all, lost roughly 10% from the highs. Second of all, retraced 12 up days. Given the fact that there are weekends involved, we're talking about more than 2 weeks of price action vanished within 1.5 days of trading. And that's exactly what we had warned about, that, you know, this market is overdone, and these type of markets have the tendency of very violently correcting lower. And you can see a 10, a 15% correction within 2-3 days, and you won't even, you know, manage to get out of your positions if you're like a shorter term trader. Because of course, you know, I mean, if your plan is to hold, you know, for years, you know, pullbacks like 10% don't really matter to you. But I know that the vast majority of the people that are here are not that type of an investor. I mean, none of us has, you know, deep enough pockets to be Warren Buffett's. So that means that, you know, these type of pullbacks do matter. Now, having to do with the Nasdaq, which, as correctly Stelios said, it was leading the way higher, Nasdaq is now in danger of actually breaking through this uptrend. So, you know, especially below 11,000, I think that, you know, things start becoming, you know, quite dangerous, because you can easily see another 500 points to the downside to the next support, which is at 10,450 roughly, again within a couple of days easily. Of course, you know, all that in the context that it's not that we are in a bull trend, that's a given from the lows. I mean, we not only took out the previous highs, but in essence, we extended as much as the previous pullback. The most important thing here is the context, and the context is that we're in an environment that the central banks are doing the only thing they can be doing, supporting asset prices. So we know that any type of derailment, especially ahead of the elections, because, you know, let's be honest, I really hope that none of you really believes that central banks are independent. And I'm not saying that about Powell's central bank under Trump. I think of the exact same thing for every central bank, and the person that's you know, the chairman or chairwoman or whatever, they always, you know, of course, have huge political influence. In essence, you know, they don't want to admit that, but in essence, unfortunately, central banks have become a shadow branch of governments. And that's a huge problem, because theoretically speaking, central banks were created to truly be independent and not care at all about what politics say and what governments need about, and what politicians need, because their role supposedly was, as a common denominator among all of them, to keep price stability and keep the financial system healthy, nothing else. Now, you know, Fed got the added role of, mistakenly in my opinion, of having to be, in essence, responsible for unemployment, which makes no sense, simply because the monetary tools are not made to affect unemployment, not in a direct way. And if you want to do it in an indirect way, as always, the costs are a lot more than the benefits. But it is what it is, meaning I totally understand why somebody would be very careful in wanting to be short, in the sense that at any given point you can have like central bankers come out and say, yeah, it's not only that we created like 10 SPVs to buy almost everything, but we're also going to be buying stocks as the BOJ is doing. I don't think we're close to seeing something like that, but just saying. In any case, 11,000 first area of support for Nasdaq. But if we do close below this ascending channel trendline support today, I think that's going to be already a big technical development for the Nasdaq. In the case of the S&P, we've already broken through and closed below the equivalent channel. Blake very correctly showed that there is an area of support roughly 3350 something, so that's something to pay attention to. But definitely some technical damage already done, and I do think there is a good possibility that we're going to see a retracement towards like at least 3250. That's the next natural downside area of support. Another chart, if you care about stocks, another chart that you should keep a close eye to is this one. This is the FANGs. Okay, so this is an index of the FANGs. So notice this channel, we close below it today. That's also going to be a major development, especially knowing that for a long period of time, a very limited number of selected stocks was just, pulling, the rest of the indices forward, and these stocks were, mostly it. So that's worth noticing. Another thing, and we talked about it, is the DXY. I mean, we know that the DXY is inversely correlated to risk assets. It's already breaking through the first area of resistance, which was this descending channel. Now pay very close attention to 94. 94 is going to be a huge area of resistance to the upside. I think that the break above 94 will open up more upside and more downside for stocks. One of our indications that started making us look for indices to tumble lower, like immediately, was last week when we finally got that break in crude. So unsurprisingly, crude led the way lower. That's not the first time actually that crude leads the way lower having to do with stocks. And the formation in crude is one thing I kept mentioning as a very worrying signal, along with the divergences in momentum and the huge divergence in volatility indices, as a warning sign that something was really not working correctly with the last days of the uptrend in stocks. So keep in mind that crude oil has broken down, and my target remains what I have been saying for quite some time, $29. And I really don't see any reason why we can't make it there. I mean, we've almost covered half the way in like what, 4 trading days or so. So I really think we can make it back to 29. I mean, I thought that we're going to go to 29 either if we broke down directly from this ascending wedge, or if we had a false break higher that would be very short-lived and we would reverse from it. So that hasn't changed. I'm looking for 29. I'm not saying that it's impossible for crude to find support higher, but my personal target is $29. Of course, each day you have to pay attention to the price action and judge from the structure as well and say what's happening there. I'm not going to cover the metals today so much because, as I said before, yes, gold has broken through this ascending trend line support, and that's important. But equally important, when you see a big breakdown or a break higher, is to see what kind of a continuation you have. And so far, I see gold moving in a very orderly fashion. 1900 remains key support, so I'm definitely paying a close attention to it. And I do think that if stocks and risk assets remain under pressure, there is a chance that gold and silver will end up accelerating lower. In that case, 1820 is a natural downside target in the case of gold. In the case of silver, my first target would be closer to 24.5, and below that I would be looking for 23. Below that we have 21, but one thing at a time. I do think that the precious metals, no matter what kind of a pullback they have, they should be bought. If you really don't want to fight the Fed, I mean, the Fed is openly telling you that what they want to do is create inflation. As I've explained in the past, I think the last thing they want to do is create inflation. The true story is completely opposite, is that the only thing they can do will create inflation. So instead of warning against it, they are preparing to embrace it as something normal, something good, something that they actually want to accomplish. I think that the last thing that central banks want to see is actual inflation, because if they do, then they'll have to do something. And the only thing you can do about inflation is raising rates. And guess what? The US economy, the US economic miracle, quote unquote, under Trump, which wasn't different under Obama, etc. So that's not like a hit to Trump. I think we're talking about the same economy, more or less, couldn't even afford 2.5% rates. So if they actually have to raise rates to fight inflation, the financial markets are going to be annihilated with whatever that means.
Excuse me, Steve.
Yes.
I'm paging John Netto. John, are
Mhm.
you here? If you are, please send me a message in the chat. Go ahead, Steve.
So in any case, if you don't want to fight the Fed, gold and silver, they have a lot more upside, no matter what kind of a pullback we have.
I want to fight the Fed. I tell you what, you get Paul in a ring with me, I'll take him out. All right? There's no doubt in my mind. In my mind, I'm a legend.
I
in the
agree with that.
ring.
You are a legend.
Anyway, so yeah, so I don't know if our guest is here. I'm going to try it again. John Netto, I hear we're a Marine, and you run towards trouble, so you should be here, because I'm trouble with a capital T. John Netto, going once, going twice for the most wonderful opportunity of your life. The window of opportunity is closing, and it's shutting. Oh my God.
Okay, let me go through some of your questions. Kirk, you know something? I'm reading your comment, and you know how highly we all think of you. So, you know, I would more than love to have this conversation with you. My problem, let me unmute Kirk. Kirk, let me know if you're okay to be unmuted.
Yeah.
I mean, if
he loves it. Are you kidding me? Kirk?
I'll tell you, because I just read your comment. He says, but what if, always consider what if? What if helicopter money is across globe, in which case no real currency impact, and they just fix a bunch of problems, lifting standard of living? That's not the doom and gloom that gets attention, but it's quite likely. You know, if you're still here, Kirk, I would be more than happy to unmute you and, you know, give you my answer, so we can actually even debate it if you want. But you know, I can already. You're here, okay? Do you want me to unmute you? I mean, can you speak?
Yes. Yeah, okay. I told you, he's not shy.
You see, live show.
Yeah.
I'm promoting him to panelist. There you go. You have another guest today.
Kirk Spano at Kirk Spano is now live on
there
Face.
He is. Hey, Kirk.
Can you hear me now?
Yeah, we can. Good morning,
Action
mate.
Junkie, how are you?
Good. I hope you can't see me.
No.
We can, yeah.
Unless you want me to promote you to
No.
co-host.
I'm in my morning uniform, which is a sweatshirt and a baseball cap.
Yeah,
which
your
is
pandemic
absolutely fine. So Kirk, listen, my only my only problem with what you suggest is the following. By giving more money to people, even if it's finally in a uniform way and not just throwing them at the top in financial assets and hoping that they're going to drip lower, which we know is not going to happen, right? The only problem with that is, I'm first of all, I belong in the School of Austrian economics. So I believe that what makes a country, what makes an economy richer is production. In what sense? For us, in order for us to consume more stuff and for money to actually have value to buy more stuff, there needs to be things produced. So how exactly are people going to become richer if the production of goods and services remains exactly the same, but you not just now throw more money around for people to be able to bid the exact same amount of goods and services? That by definition is inflationary. So what's going to happen is that everybody's going to have the same ability to buy the same amount of services and goods, but in money values, they're just going to be worth more nowadays. I mean, after we do that. So that's my counter argument to what you said.
Right. And I understand that. So my working theory is actually fairly simple. And I've been talking about this since I was on Market Watch 6-7 years ago. I believe that we have deflationary pressure that is organic due to the demographics of the planet. The four big economies, right?
By the way, I'm with you there. I agree with you there.
Right. And then we have created a deflationary force with all the debt and then all the counterparties tied to derivatives. So there is natural deflation and then deflation that we've created. And we're trying to use monetary policy to inflate our way back out. And what they've done, in my opinion, and I've actually talked to several Fed presidents and people in the Federal Reserve. My opinion is that they're using cyclical counter policy on a secular problem, and they've made the secular problem worse. I don't think there's any possibility that we can grow our way out of anything. I think that they've broken it so badly that either A, they'll keep doing what they've done and eventually you'll just get a mega crash, or B, somebody will wake up at the eve of the crash and say, hey, why don't we, instead of borrowing money, just print $20 trillion, give or take, and buy the Fed balance sheet, maybe give it to Social Security, pay off all the student loans, wipe out all the pension deficits in the public sector, which is what, 6 trillion negative. And why don't we do an infrastructure bank? There are a lot of ways to get money into the system without creating debt, because you're allowed to print money. That's just the rules. But trickle it in over 20 or 30 years through pension payments, through infrastructure plans, through debt forgiveness, which pulls a bunch of consumers in. But I'm not saying that right now we don't have overcapacity. We certainly have overcapacity. The only way to save the world from a depression, in my opinion, that's stagflationary, is you have to rebuild the world. That's the only solution, is to rebuild the world and unburden the lower and middle classes from a lot of their debt. I think that's the only way that you do it. I could be wrong. I probably am, but we'll see.
Kirk, I agree.
What did you mean about the COVID ×5, Kirk? What did you mean by that in your chat?
Oh, so people want to compare COVID to the flu.
To the flu, yeah.
And what we know is that COVID's probably 5 times more deadly and
Okay.
about twice as contagious, but we're doing things to prevent contagion. So, you know, and I think we talked about this 2 or 3 shows ago. I said when the death rate was at 4 or 5%, I said, it's going to end up being around 1%. And I think that's about where we've headed.
Yeah. You
Which
and
is
your
about
family
5
okay?
times the flu.
You okay?
Yeah, I just sound nasally because I'm in Wisconsin and
Well,
we have mold and allergies.
are you in Kenosha? Are you marching in Kenosha?
No, man.
Okay.
No.
So,
I
Kirk,
will.
my argument to what you, first of all, I agree with most of the things you said. For example, I totally agree that the system is broken, and unless it gets rebuilt on solid foundations again, none of the rest is going to work. So we totally agree on that. But one of the problems that needs rebuilding is the way, the perception of the average citizen about how things work. So how are you exactly going to solve these type of problems by, in essence, exponentially increasing moral hazard? You said, for example, we should forgive student loans. The main reason I'm totally against that, and I remind you, I'm Greek. We went through a huge crisis 10-something years ago, and as part of the quote unquote solution was to inject a lot of moral hazard in the system. For example, mortgage loans. We passed a law that people that had been affected by the financial crisis and their financial ability, their income, etc., decreased due to it, they could just go in, a court of law, make their case, and the court forced the banks, to cut down their payments, even the capital required. I mean, they could have like a 50% haircut or 70% haircut to their mortgage loan. As you understand, the result of that was the following. The banks had to be recapitalized 3 times so far in 12 years with, of course, taxpayers' money and or debt that has to be repaid by taxpayers' money, and a lot of people that actually had the ability to repay their mortgage loans managed to toy the system and have huge haircuts to their loans while they actually had, fully the ability to repay. Same thing, let's say, with the example of student loans. Let's say there is like, I don't know, almost 2 trillion of student loans. Let's assume that you say, okay, let's repay them all from, the money tree. We print money and we repay them all. First of all, why repay them all? Second of all, how to choose between them? Third, I'll give you a personal example. Ellie, one of my wife's best friends, she lives in New York. She's married with an American, and they both had student loans. They both finished NYU, and they both found good jobs and wanted to repay their loans much faster than the actual repayment period because they didn't want to have that hanging on their heads. So they repaid their student loans within 3 years. I mean, can you imagine how stupid they would feel for doing the right thing when they realize that everybody gets a pass irrespective of the criteria? Now, if you do that, how exactly are you going to persuade people to, after this reset, behave appropriately so the system doesn't get to the same point again in zero time? How are you going to persuade them that they cannot be forcing their politicians to offer them more and more free stuff that the economy can't afford? That's my main issue with what you're saying.
All right. So since you're Greek, let's go back to, and I'm going to paraphrase this wrong. Once people realize they can vote themselves money, you've got a problem, right? So I don't believe that anything works that's free. I don't believe in free healthcare, free education, none of it. Because you're right, to avoid moral hazard,
How about
you have
sex?
you have to
You
you
pay for that too,
anyway.
buddy? Huh?
One way or another, you pay for that, right? And I'm never going to be able to be a
Well, oh, that's
politician
so
now that I said
cynical.
that.
You're such a cynical guy.
Now that I said that, I can't be a politician. But I think the reality is that everything requires skin in the game. So I don't believe in free education. I believe in cheap education. I don't believe in free healthcare. I believe in affordable healthcare. What we're facing, and you're going to have to find an answer for it, because there isn't a way to grow out of it. It doesn't exist. It would take 10 generations to grow out of this if we didn't take any more debt. I mean, that's the real number. It's like 8, 9, 10 generations.
True.
So
Very true.
we have to create a one-time solution. Then this is a Milton Friedman thing. I mean, this isn't left wing. This is Milton Friedman.
I'm with you. How would you make sure it's a one-time solution? How would you persuade people that it's a one-time solution and it's not the first time we use the solution? That's my only problem.
In my working paper, I specify, and I've actually talked to somebody, you would know the name if I said it, but it's a big private organization in Wichita. I believe that once you do helicopter money, you have to have limits on what the Fed can do and what the United States government can do. You essentially have to have you have to put guardrails around the budgets, and you wouldn't have a balanced budget amendment or anything like that, but you'd have to have rules that you're basically, unless you're engaging in counter-cyclical policy, you have to run a relatively balanced budget. And getting politicians to adhere to that, right? Because they'll print the money, but they don't want rules on the backside. They're hypocrites about that, because they want to put rules on everybody else, but then they don't want any. So everybody's got to have proper regulation, even the Congress, even the Federal Reserve. They have to have a set of rules that they stay within, and they need to be transparent about it. Now, I understand how unlikely that is. But faced with a potential stagflationary depression, which is what I see in the next 10 years, they have to come up with a severe one-off policy solution that not only fixes today, but prevents problems tomorrow. And I agree with you, that's very difficult, but that's what they have to do. Otherwise, we have big problems for a generation.
The reason I'm very pessimistic about that is they never acted when acting would involve doing much simpler things than what is required today.
I agree.
You know what I mean?
I agree. For 40 years, the whole world has run on credit, right? That all changed around 1981. The world has run on credit for 40 years, and we've had, at least here, the top 20, 30, 40% of the population has done pretty well, but the rest has not. You've got 60, 70, 80% of the population that hasn't had a real wage increase in 40 years. So I understand, and the whole theories of crowding out with government borrowing, I would extend that to say, look, what we've really seen is wealth flow to about 1% of the people and the government, right? So if you can reach your hand into the government largesse, you're going to get rich. Or if you can be in a position where tax and regulation rules are on your side, you can get rich. But the debt of this country is really on everybody. And weirdly, and you can call this a coincidence or not, but you can look this up, the increase in wealth of the top 1% is roughly equivalent to the increase in U.S. debt in the last 40 years.
Well, it reminds me of a song.
What is that, Dale?
Tennessee Ernie Ford. 16 tons, what do you get? Another day older and you're deeper in debt. Yep. St. Peter, don't you call me, 'cause I can't go. I Oh, my soul to the company store.
I think
Exactly.
today's show has everything, right?
And he'll be here all week, ladies and gentlemen.
Spontaneous debates,
Huh?
singing. We have everything on the show,
It's
right?
a variety show. So anyway, it's a variety show. Remember, everyone, don't count your pips. Count
Thank
them
you
if
very
you got
much,
them, but
Kirk.
not
Thank you very
just your
much.
pip.
By
Not
the
your
way,
pips.
I debated Mark Yusko a couple years ago on Twitter, and he ended up being the one that was wrong.
Wow.
You know something? Wait. You know something? We have a good relation with Mark.
He's
You
a
want to do
great
it?
guy.
He's a great guy. You want to do it again live on the show? I can make it happen.
They'll crush me, but I'm better. I'm better with the written word. But you can put me up there. I can be the chum.
Okay, done. I mean, I'm pretty sure you can have a wonderful debate. So I'm going to speak with Mark anyhow within the next few days. He's going to be on the show. So yeah, we'll make it happen. Instead of an interview one day, we can extend it a little bit in time and have the two of you have a debate here.
And we have someone from the Middle Ages with us tomorrow. Crypto Night 60 will be here. We'll see if he brings his lance and sword and ready to just slice through what's happening in Bitcoin. So everyone have a great Tuesday. Feels like a Monday to me. Have a great Tuesday, and we'll see everyone tomorrow. Nice hearing your voice, Kirk. Good job today, Steve. Everyone sign up for this. You have two hosts at this event. You have a professional. I know who it is, and a lot of amateur hosting by me during the summit. So, hey guys, have a great day, and we'll see you tomorrow. Remember, if you didn't find anything to do today, it's kind of natural. It happens. We had to turn in the dollar last week. Now we're trying to see if we're going to get follow through. The big moves were last week, so you can't expect them every week. Anyway, pick your spots. We'll see you tomorrow. Adios. See you later, Steve.
Thank you
See you,
all.
Kirk.
See you later. Bye-bye.
Take care, guys.
Adios.